Greetings. Good morning. This is Jeff Scott. It's 8:36 on July 9th. So obviously in the morning there's no futures to talk about. And this is my weekly top-down review. And thank you for joining me today. And I entitled today Summer Rally versus Dead Cat Bounce. Um, in this little graphic depiction in the corner, you can see what happens in a dead cat bounce. You've had a big run up, you've rolled over, you have a sharp rally. Now, what we don't know is, are we at the top of this sharp rally? Are we about to go to new lows based upon time of season? You might think that's the case. Or is this a rally that takes us to new highs? I don't think I can tell you the answer. I don't think anybody can. We can all predict and guess and hypothesize, but only the market's going to let us know. As always, it's for education purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. That means I pay for all my own tools. No one pays me to say good things about them. And I have lots of tools. Trading involves risks. I, at times, will talk specifically about options and how I use options. I don't recommend that you trade options without education about options. I refer you to the Option Industry Council that has some wonderful documentations about the risks of options trading. I always like to call out my influences. I'm trying to shorten my presentations, which I'm failing at. But basically, I started with CanSlim, improved by Morales and Catcher, made electronic by Ian Woodward and Ron Brown. John Person taught me how to trade. His concepts of when to take the trade, stops, targets, money management, very practical, very useful, great indicators for TradeStation. Van Tharp is really the god of money management. George Lee, my buddy from Canada, whom I've shared the podium with multiple times. And then the newcomer, Guy Cohen, he's got some very nice web-based tools that are useful for shortcuts, I think, if you don't want to spend the rest of the time that I spend. I find it very useful. He's got his own unique indicator called OVI. I own a lot of different programs for multiple reasons. I hide what's on my dashboard when I do these, on my desktop when I do these programs, but I need a trading platform. I use TradeStation and Thinkorswim. I find them to be mutually beneficial, and certain things are exclusive, i.e., Radar Screen and TradeStation is 1,000 times better than MarketWatches and Thinkorswim. The Thinkorswim scanner, I can scan during the day and look at the chart as if it's an end-of-day chart. Big difference. On the analysis part, HGSI, I'm obviously a big fan. EdgeRater, seasonality, I use a number of programs. A comment about my email address of hgsidoc@gmail.com. I am independent. I have been doing volunteer, unpaid support for HGSI for over a decade, hence the email address, but I have no financial relationship with the company. Speaking of the company, here's the website. I call this out for a couple of reasons. One, under investing strategies, you'll see some names included in there will be mine and also Ron Brown. I would say Ron and I are two of the power users. Ron's more of a power user than me, and I'm sure there are many others, but we both use the tools differently. Ron has been very involved in volume spread analysis. I've sort of stayed the traditional route of what I learned from Ian and improved upon with John Person, but you'll see hundreds, if not more, videos from Ron and I there at no charge, even if you don't register. And up here under free 30-day trial, it's truly free. They don't even ask for a credit card. Highly recommend it. If they ask who referred you, say HGSI Doc. Stock patterns are cyclical. Last week I talked about how tough it was when the market was bifurcated to the point where certain stocks last week going into the week felt like they were starting a new bull run, and other stocks, specifically technology, felt like they were going into a bear market. Well, what a difference a day makes. I can't even say a week, because really things changed on Friday, and you'll see a very strong market, and a market that be interesting to see if it's enough to pump technology back into a bull phase, or was it that dead cat bounce? So I started putting more money at risk, But I got to tell you, I'm still living in the land of uncertainty, which means less positions, smaller positions, and more cash position than I may have at other times. And I have to really know where I think the market's going and whether I'm aggressive or defensive. As I said last week, it's tough sometimes when different parts of the market um, are doing different things. Speaking of a strong market, this is how the market ended on Friday. And if you haven't been here before, it's a very simple graphic. Green is good, red is bad. I've broken out, or John Person had broken out, and then I adapted it into some of the major sectors to give me a sense of what was working and what was not working. This is really cool because intraday, if there's a move into a new sector, you start to see a lot of stocks moving above 1 or 2%. Transportation was one of those sectors on Friday. You can see not only as transports all green, trucks, planes, but and deliverers, but you can see some of these. Hawaiian was up 2.5%. JetBlue was up over 2. Spirit was up almost 3%. Delta was up 2%. There's institutional money flowing into transports on this picture. Just going down the list, home builders mostly strong. Tempur-Pedic, Williams-Sonoma, and Restoration Hardware are more places you go to once you build your house. So home builders are strong. Materials relatively strong. Steel and gold weaker on the list. You get to where the money's not going. Every once in a while you get a day or two pop, but for the most part energy was weak. Financials with interest rates rising, as I'll show you, firmed up this week. Then we get to broker dealers were strong, credit cards strong, industrials. Now I'm looking at the percentages. Most of the percentages are less than 1 except for DICOM, but industrials were quite strong. Technology, take out AT&T, which is a communications play and a dividend play, but technology was strong. Semis strong. Staples have been weak, remain weak. Discretionary looks stronger. Retail, interestingly, a lot of green. And then as I look over here, home builders broken out, REITs, casinos, a lot of strength there. So this was a very, very strong market on Friday. Major markets tell a story. This is a daily view from my thinkorswim platform. And the upper left is the E-minis, and the center is the NQs, and the upper right are the YMs. So the S&P futures, the NASDAQ 100 futures, and the Dow futures. Down here, because I wasn't going to pay the TF $100 a month, is the Russell ETF IWM. Starting tomorrow, you'll have a new free, I believe on thinkorswim, Russell futures. It goes back to the CBOT. I think that's who it's called. Over here is the dollar futures, and down here, excuse me, is the VIX futures, and over here is the dollar futures. So very quickly, I point out that on 3 of the markets, besides the Dow, are in PPS daily sell signals. That certainly points to short-term weakness. Again, Friday was a strong day. You look at the VIX, and the VIX multiple times, except for this one here, have failed at the descending 200-day moving average. That happened again last week or the week before, and we are clearly higher than we were going back many months. So there clearly is higher expectations of volatility in the market. But we're still at relatively low rates, and the dollar has really rolled over despite firming rates. If I go to a weekly chart, I think it looks different. The sole sell signal is in the NASDAQ 100. And in fact, you're in weekly buys on the E-minis, the Dow, and the Russells. This little bubble here is going to be the all-time high price, and you could see how close the bubble is to where we closed on Friday. So how weak is a market when all the markets are trading, within 3 or 4 weeks of their all-time highs, and none of them would be on the weekly basis as even pull back to their 17-day weekly moving average. You can see how the VIX is in a funk and the dollar struggling here. Just another way of looking at it is, now I'm looking at columns. The first row in the column is the daily, the second row is the weekly, the third row is the monthly, and then we have the E-minis, the NASDAQs, the Russell futures, NYSE, and the Dow. And there's a lot of chop on the daily and weeklies, and there's a difference in signals between Genesis and TradeStation and Thinkorswim because there's small difference in the algorithms. But take forget the NYSE, look at just the futures. Different degrees of rates of rise, but all the futures, again, we're going to ignore the NYSE here, are lower left to upper right. So we're in long-term uptrends. Now, some things that I think were market moving this week. You'll notice the rates here spiked up. This is 2.5, this is 3, this is, I think, is at 2.9 or 3%. And I kind of drew those for a couple of reasons. To me, if I can stay between 2.5 and 3%, that seems to be a very good place for the market to be. When we drop well below 2%, the market's usually weak because that signifies some type of economic risk. If we go up too high, obviously, you can see what happens to the market. You know, I laugh with my kids who are now 29 and 26 that my first house, the interest rate was 13.5%, and that's when it was bought down by the builder. And no, it wasn't because I had shitty credit. I had no credit to speak of except for a couple credit cards from med school. That was the rates. So we popped up on both the 10-year and over here on the 30-year. So if you think about it, falling rates are good for REITs, MLPs, utilities, dividend payers, and home builders. So home builder strength and rising rates, I think it's still because rates are relatively low. Perhaps people will be incentivized to go out and refinance or more likely build new houses when the rates stay low because they think they're going higher. I think they're going higher. You know, with the rising rates, things that pay dividends like the REITs, MLPs, and utilities, and dividend payers may suffer some. And in fact, there weren't a lot of strength among those groups as I went through my list. Home builders did hang fairly well, and the banks and the insurers look stronger, and I think you can see why, and that's because the rate's popping. Now, again, I apologize. These show up much better when I put them in the native resolution of 4K. Maybe they'll show up better when you don't have a glossy screen with the light in the background bouncing off of it as I do. But you'll notice on both the 2000 and the 1000, the big stocks and the small and medium stocks, that you sort of have the fish mouth opening up here. Well, what's going higher is the AD line. What's going lower is the spider. If the AD lines are still going up, the price is falling, to me, that's positive divergence. Or, as John would like to point out, more properly said, that's convergence. That's a positive sign for the market. So if you want to be bullish, the disconnection here between AD lines and price might be considered a sign that this market is going higher. What about breadth? Now, I look at lots of different breadth indicators. You're going to see about 5 of them over the next 10 slides. Stocks above the 200-day simple moving average, stocks above the 40-day simple moving average. This line here has been a place here where the markets had turned back in the past. We're below that. We're in the middle on the stocks above the 40. We're certainly in the higher part of the range, so I called it neutral strong, but far from overbought. If I look at the high-low ratio over 13 weeks or 3 months, here's where I was last week, here's where I was this week, right in the middle of the range. Again, this isn't helpful, and the other charts, I don't think, in the prior slide are not real helpful, except when I'm at extremes. We're not at an extreme. The daily and weekly McClellan, I'm just going to look here. We are in this very narrow range oscillation around the zero line on the oscillator. And if you look down here, the summation index continues to have lower highs and higher lows. McClellan puts out a newsletter, and from reading the newsletter, this narrowness here seems to be an anomaly, an unusual occurrence, and they tried coming up with explanations, but it's not something that they've seen before. It's interesting, and maybe it has to do with the fact that the market's slowly trudging higher, and the way it's trudging higher is the fact that you're having rotation of the market rather than the whole market moving at once. And so you're not seeing much of a difference in breadth because some are going up and some are going down at the same time. I don't know. Here's another of my favorite breadth indicators, the buckets. Now, why is this important? So for newbies, I take the 1,500 stocks in the S&P 1,500. I put a Bollinger Band on each of them. This here tells me that half of them are above the midline of the Bollinger Band, half of them are below. I would say the word neutral comes to mind. This is a S&P 1500 that I put together last month, and now I take the stocks and look at where are they within their Bollinger Band. If they're in between a percent B of 0 and 10%, they're in this bucket. If they're below the Bollinger Band, they're down here. If they're between 90 and 100% on the percent B, they're up there. And if they're above the Bollinger Band, they're out here. I would say bell-shaped curve, very neutral. I look for the Hindis. Now, people know that I probably spend more time on this, partly because of my education from Ian Woodward, may he rest in peace, but also because I was trading in 2007 and 2008, where it saved my bacon. I look for lots of these coming together. We saw some at the end of May, where we had a rare occurrence where they fired both on the NASDAQ and the NYSE. If you look down here on both, you're going to see threes or red. That means 3 of the 4 signals. The reason why they didn't fire is we don't have enough new highs and new lows occurring at the same time. The Hindi signifies a market that's going from a professionally driven to an amateur. We're amateurs, by the way, unless you're a professional listening to this. And, there's a lot of new highs, lots of new lows. The market's up and down. It feels violent. And it's really a shift of money from the big hedge funds and banks to the individual investor, and it typically signifies a top. I'm not sure that being 3 out of 4 and being close counts. Now, here's a bearish concern. Every time, if I go back years, that we're we're spending time on the Woody indicator, which is this third column. Green is bullish. This is a time to be long in the market. Red is bearish. This is a time to be careful and be short in the market. And when I start to see everything, this is chop, which is a time how we lose money. It's hard to be directional in chop. Typically, when I get a line of kahunas, now kahunas are a percent B change of greater than 0.24%. A dark kahuna is when the percent B change is greater than 0.4. Typically, I reverse markets when I get a broad base of kahunas. So here was a market that was bullish and choppy, big kahunas across the board, or kahunas across the board, and we reverted to a bearish market. Here's a bearish chop market, and then I had 3 firings of kahunas and ultimately turned into more of a bullish looking chop, followed by a series of kahunas. It became bearish. Well, we've now had 2 fires of kahunas across the market, and it hasn't taken us out of this bearish chop. So maybe the third time's a charm, but the fact that we keep getting these one-day wonders, which is what those kahunas end up signifying, and it doesn't change the market, that's worrisome. That goes in the dead cat bounce camp. Sector strength, again, paying attention to the Woody indicator. Here's your sectors across the top. You could see over here on my arrowhead, discretionary, staples, and utilities remain weak. The only green is in healthcare. The rest are neutral. Then I look at 2 other ways. Now, historically, I've looked at what we call the canaries in the coal mine, being the FANG stocks extended, Apple, Netflix, Priceline, Google, Facebook, Baidu. Make a index of those, and we've always taken the opinion that when they roll over, they may signify market weakness overall. Now, interesting thing is, if I actually followed everything that I say, and I do follow it pretty closely, frankly, early June, these things broke down, and when you broke below the 50-day moving average, that was certainly a sign that you needed to be careful in this market. And you can probably tell by my tone over the last 6 weeks or so that I've been much more cautious than I was previously. Up here is the weekly bongo, and when that's red, it's also a time for caution. I often use that as a filter to stay out of the market. For example, I'm in the market into here and I went red over here. So it was late to get me out, but I didn't get back in until I was back above the 50 in an uptrend. I pay attention to that. When the daily bongo, which is the second red bar, goes red, if if the weekly bond goes red, that just tells me I'm in a weak market. But if the weekly bond goes green, so I'm in a long-term uptrend, but the daily goes red, as it did in these areas, that's a time to be looking at a market because that's a pullback in an uptrend. The third bar there is accumulation distribution. I'll leave it to your imagination. Green is good as red is bad. We have the 13-day and the 2-day force index. I use similar to the bongo. Um, the fact that the 13 is red, that means we're in a downtrend. The fact that the 2-day was green, retracement in a downtrend. This is my high jump bar, which I'll talk about later. When it gets up near the top, you almost always see the market pull back or go sideways. The red column here is a red candle high. That could be a bearish signal. And notice how it precipitates these pullbacks every time. The green candle here is a green candle low, and that might be a bullish reversal signal. You won't see anything here on this index, but the next thing that's white, those are buyable gap ups. The mustard is a squeeze. Just think about squeezing the yellow thing onto my hot dog. Um, the MOBO breakouts, and that was not meant to be dirty. MOBO breakouts to upside green, downside red. In my charting box, you'll see the same thing over and over again, although sometimes I do a cleaner view on the indexes. These little red dots and the green dots, which are harder to see, are Wilder PSAR. It's a buy-sell signal from a system. When it reverts, it signals you to make a trade. I don't use it that way, but I use it as a tool to find stocks that are about to move. I'll show you how when I go through stocks. I have very simple moving averages. Well, not all simple. The magenta, taken from Ricky Sadler and Steve Bigelow, that is the 8-day exponential moving average, also referred to them by the T line. You will notice that in uptrends, it will be support, and when the stock is in a downtrend, it's going to be resistance. They use it as a buy-sell signal. To me, it's a little tight for that. Then I have a series, of simple moving averages, including a 17, 50, and 200. I use candlesticks. That's pretty obvious. You'll see on some charts a gray line here as well, and that signifies industry strength. As I go down here, I get to some of the HGSI and other indicators. The pink in the blue, blue is good, pink is bad. The darker the color, the worse the signal, or stronger the signal. And these are pocket pivots from Morales and Catcher. So I got my pocket pivots and I got my buyable gap ups. Then up here I have on balance volume with a moving average. I look for convergence and divergences with price. I look at breakdowns and breakouts above the moving average. Down here, you see some red and some green lines. Those are called eurekas. Eurekas are the follow-through days to the upside in green, downside in red. It's sort of the HGSI mathematical equivalent of O'Neill follow-through days. Something to keep in mind, though, if you start to see red, which are phoenixes, in a market that's sold off hard, that's probably a little bit too much exuberance and could be counterintuitive, as it could be a reversal is near. When I see green at the top, the same thing, that's an exuberance day. So I look for red at the top as a signal that the market might be rolling over. I look for greens at the bottoms. And then we'll finish here with a regular volume chart. And these here are the kahunas, which I mentioned are the 0.24, the 0.4 move in the Bollinger Bands. With a lot of research, Ian convinced us that these were significant moves, and I just look for it for a sign of momentum. So canaries have broken down. Now, about 3 weeks ago, I used one of Ian's other tricks, and I put together an index of leading stocks. So unlike the FANG stocks, which are very narrow-based, mostly technology-driven, I wanted a list no more than 2 stocks per industry group of the leaders in the market, again, about 3 weeks ago. And I was going to use that list for when that broke down was the time to get out of the market or expect some vicious rotation. And yeah, we've broken a little bit or bent, but we're sitting right at the 17-day moving average. This looks kind of like my portfolio, pulled back a little bit, but really not much damage. I mean, that's not my equity curve. I wouldn't mind, my equity curve is pretty good, but that's a pretty crazy move. Um, and you can see how nicely it's moved up since. Now, I chose it back around here, and these were stocks that were leaders at the time, so of course you have a good picture. The key component to talk about here is this is not a broken index. Great leaders pull back frequently to the 17-day moving average. Most leaders at some point pull back to the 50-day moving average, which is called free parking. Stocks or index groups that break below the 50 are probably not leaders anymore. Know your news and earnings. News is big. Last week we had the news of the employment numbers on Friday, and I'll talk about them again, but you had the sense the market was going to sell off. All the pre-numbers, ADPs, the Challenger reports are suggesting that the economy is weakening, employment picture is weakening. At the same time, as they start talking about raising rates and removing the punch bowl of QE, and then they get a big upward surprise, and that really propelled the market because I guess for one day at least, the thought process must have been the economy is strong enough to handle the rate increases. Well, God bless them. It was a good day in the market for me. Here's what's coming on this coming week. This is out of Bloomberg. Here's the reference here. The dark black is the Fed head, so you do see Janet Yellen speaks on Thursday. That has a tendency to move the market. My guess is you're going to hear a lot about underlying strength of the economy and the desire to normalize rates and monetary policy. And I think normalize is important because we're not taking rates that are high normal and raising them to slow down the economy. We're taking rates that are historically low in QE, which is historic, and we're removing some of them to normalize. So hopefully we're not putting the brakes on the market. You need to know the news, and certain things move the market every week. You get some energy reports. Some of them come in on Thursday, and I think some come in earlier in the week as well. And here they are on Wednesday, petroleum, Thursday, gas. Well, those will make a difference if you own a lot of energy stocks. We're going to get some CPI, industrial production. I think the big mover was the employment. The other thing that happened last week that I thought was interesting, the Baker Hughes rig count, which gives you an idea of how much new drilling there is, actually dropped. And that might be good because if you own energy or want to own energy, it'd be nice to see oil firm. On the other hand, filling your tank at $2.06 a gallon sort of feel like deja vu of being a lot younger. Here's the earnings, and yes, it's a relatively reasonable week. Barracuda Networks, I think they look interesting here, but I won't touch them until after earnings come out. Small regional bank, Bank of the Ozarks, that might give us some idea. MSM has been a stock pretty sure I was looking at it as a short, but it moved up on Friday, but it's sitting at resistance. Again, I don't play before earnings. Delta at all-time highs on Thursday. The airlines looking great. And then we start to see some financial earnings. Most of them, or all of them except for Bank One, got through their CCAR and other financial tests by the government. Bank One did too, but they had to do some more additional reporting. And I know I have a big position in Bank of America, and they increased their dividend and their buyback. The confusing thing was the next day they announced that Buffett just exercised a huge amount of options or warrants rather that he got during the financial crisis for giving some money. And so he's now the number one owner, I believe, of Bank of America and Wells Fargo. I doubt you'll see a merger of those two, though. So market thoughts. Short trading week starts with increased volatility and ended on a high. Friday's monthly unemployment report surprised the upside and for at least one day alleviates the fear of Fed risk for removing low rates and QE. It's not saying they're not going to remove them, but the risk was lower. Um, Interesting how many industry groups had short-term momentum to the upside. On Thursday there were two. On Friday there was 50, and I don't think there's anything to the downside. While most major indices or daily sell signals, breadth, and other indicators appear fairly neutral, and market week to me ended with the feeling that the market wants to go higher, but I still don't think it's time to go all in as we enter the dog days of summer with higher risk months of August and September on the horizon. We'll do my typical top-down review. Let's go on to the charts. Um, Here is one of the things that I like to do is take a look at what worked, what didn't work. And the S&P 500 last week, and this takes the close on Friday the 30th to the close on Friday the 7th. The S&P 500 was flat. It was up 0.07% on the week, at least by this metric. The Market Smith 250, which is kind of my benchmark that I might use for high growth stocks, the types of stocks that I buy, was up 0.01%. You could see a sort of a balance to the downside and to the upside, but those things that were to the downside, bottom fishing did not work. Cheaper stocks did not work. Negative earnings growth short in supply in the short term, which you would think is a bearish group, did not work. Small stocks, small floats were weak. And then I could look at what was strong. And even my buy list was weak or down about 0.31%. What was strong with my current holdings that I had were up nicely. And then I've got a number of watch groups that I use, but these are the ones that I fish from, the ones that pull back to support, and they actually had a good week, up much more than the S&P. The other group I look for is this group here that are squeezing with reversals, and interestingly, the ones reversing to the upside and the ones reversing to the downside had about the same performance. But the S&P and Market Smith 250 for the week were flat. And then this one here, the 85.85, this one is the weekend review, ones that have both industry strength and are leaders in their industry. So yeah, it's a mixed picture, and there is some weighting to the downside here. All right, let's go and look at my 5 or 6 point analysis in TradeStation. So for those who haven't been here before, I do this on a nightly basis, and it just grounds me as to the strength of the underlying market. We'll go to the E-minis. Doesn't matter if it's 60 minutes, if it's dailies, because I'm not looking at the right side, I'm looking at the charts. I'm looking at 5 or 6 factors. Factor number 1, am I in a PPS, person buy, green, or sell? I look at 3 time frames, daily, weekly, and monthly. Here I'm in a daily sell, but weekly and monthly are strong. Check mark. Put that into the mix. I look at the paint bar color. A green paint bar color says it's good to be long or hold. A red paint bar, but you shouldn't short. In a red paint bar, I can be short or holding, but I shouldn't be initiating new longs in that market. A blue paint bar is neutral. So I've got blue, blue, blue. So neutral in the paint bars. Third thing I look for are where am I on my envelope. Because when I get above the envelope, I'm going to go sideways or down. These are not Bollinger Bands. These are Elder's Auto Envelope. So we're kind of neutral. Fourth thing I look for are these red dots here. Sometimes I'll see green dots underneath, and those tell me that there's MACD divergence. It's a MACD divergence scanner. Bear is bad, bull is good. I see nothing. I look at the high jump bar, and when I show you the NASDAQ, I'll show you where it was not too long ago. But we've come down, we're at midline. When I'm above 90, I'm concerned. When I'm above 95, I start to get out. Because when I get above 95, markets pause or fall. So you look at this, and we're mixed, but I'd say the only negativity to me is the daily sell. Longer term, we're in good shape. So I'll give it a neutral. Neutral, maybe a little. I'm going to go pure neutral, and we'll see where we go this week. If I look at the Dow, interestingly, the Dow is still in a sell signal on the daily, weekly, and monthly buy signals. It's got a green bar on the daily. And so my guess is it's a high chance that if the Dow trades up on Monday or Tuesday, it's going to get an arrow as well. So similar picture, red arrow, but green, up with blue bars on weekly and monthly. Within the envelope, no MACD divergence, midline on the high jump. The other thing to mention is the bottom thing here, which is the bongo. I actually coded the bongo as well for TradeStation. 3 time frames here, daily on top, weekly and monthly. And the one that I pay most attention to is the weekly. I don't like to be going long when the weekly bongo is red. Then I'll look at the NASDAQ, which should also be weaker. And one can see it's been in a red arrow for better part of 10, 3, 6, 8 days. It's in a down signal on the weekly, up on the monthly, blue bars throughout. So I would say thus far, this is the weakest that I've showed you. It's pulled back more on the high jump. Notice the weekly bongo is red. So this is one that is concerning. It's abutting the envelope here. It's certainly not pulled back well below it. So the NASDAQ, the weakest of the groups. And then we'll finish with the Russell. And what do I see on the Russell? Again, in a sell signal on the daily, but with a green bar, blue and blue, 37%, the weekly bond goes green. So to me, the strongest here, probably the Dow and the Russell. The weakest would be the NASDAQ by far. Then I'll look at things like the dollar. Notice the green dots. They can go on for a long time. But when you start to see them, you start to see a market that's showing evidence of being perhaps losing some of its force to the downside. Here is the MACD histogram. Here was a prior low, another low, and another low, where clearly, if I was to draw a trend line, and by the way, drawing on charts is not my strength. If I was to draw a trend line through there, well, come on. Well, that didn't work. Forget that. I'm not going to spend that much time trying to do that. If I was to draw a trend line, we're clearly in a downtrend here, yet my MACD histogram is lower here, so I have less force pushing it down here. That's divergence. But the dollar is weak. It's in a down signal on the daily, the weekly, and the monthly. It's got blue and red bars. It's at 9% on the high jump bar. Getting pretty low there, and I might be looking for reversal coming soon in the dollar. Low dollar should be good for oil historically. Now it's more about supply and demand. Oil got a new sell signal on Friday. It's in a weekly and a monthly sell. The weekly bond goes red. The high jump bar is coming down. Oil is weak. Boy, weak dollar should be strong gold, right? No. Gold has been a 3 time frame sell signal. Weekly bond goes red. It has some divergence. Maybe it's getting close to a bounce. People know I've not been a gold bug during this period of time. So that gives me a sense of the market. Clearly not all doom and gloom, although the NASDAQ looks pretty bad and the dollar looks horrible and oil looks bad, but also not a rip-roaring bullish feeling. Now I go into HGSI, go down here. Everything I show you in HGSI comes with the program. If you don't see it in yours, ask support, drop me an email. If you are new to HGSI and you turn it on and you see this thing here and you go, what am I supposed to do now? Email me and I'll send you some videos of what each of the buttons does, as well as a PDF and video of vocabulary. So Major Markets Plus is put together by Ian and Ron. Well, now that Ian's passed. And this here is a list of major industries. I'm going to put a top-down view, which is price and volume only, and it shows me what's moving on a very short-term basis. And then I'm going to rank it by raw combo, and I'm going to see that at the end of the week, small stocks up at the top. Here's the 600 and the Russell 2000, okay? transports, biotech, semis, mid caps, 1500, 500, 100. Boy, this was a beautiful picture if you're long equities. What was weak? Gold, silver, oil, dollar, bonds, and the VIX. All right, so that's why I made money on Friday because I was long equities. Take a look at some of these. Now, here is the same view that I was using before, but now what I want to do is, and actually I want to use a smaller because I want to be able to get at my, all right, let's go into a cleaner view. Let's take a look at what we see. This is the bongos here underneath. I have two different ways of measuring the bongos. I don't want to miss them, not the bongos, rather the Hindenburgs. I don't want to miss them. So I look for tracks, a series of Hindenburgs. I've seen a couple here. Um, I'm waiting to see when the next one occurs. I'm in a clear uptrend off of this low at the election. In fact, if I look at where I was from when the market closed here to where the market closed on Friday, we are up 16% in 167 days. Not too shabby of a market. Clear lower left, upper right. We pulled back and stopped at the 50. My weekly bongo was still green. I had a kahuna to the upside, which sort of negated the kahuna to the downside. Notice there's no volume on the S&P, so I'm not going to get forces or things like that. You know, I love to buy stocks in an uptrend that pull back to the 50 and have a kahuna. I'm bullish this market, at least as it is sitting right now. We're in a weekly bongo, bullish with a asterisk of I'm not going all in, but I feel comfortable that the S&P has not given me a signal that I shouldn't be in this market. I'd like to see it get above the 17 and hold above the 17 as it does during some of these big moves up. But pullbacks to the 50 are not killers. Dow Jones, bullish. Kahuna at the 17. NASDAQ, not so good. NASDAQ fighting to get back above the 50. All it takes is one more good day and we're back above the 17. It did have a kahuna. Volume looks a little bit on the lighter range on Friday, below its average. But the NASDAQ has little work to do. It should be pretty clear that that's what was the weakest. And the Russell, which had been the weakest, you know, the thing about the Russell that's kind of interesting is this. The Russell has basically been in a trading range, and I probably made the top a little bit too high, going back to December. The Russell has gone nowhere going back to December. When this Russell breaks, it may break with a lot of pent-up energy. And notice the weekly bond goes green. I'll go back to the S&P for a second. I was just wondering, I want to draw a line on it because it looked like something here. Let's see. Pause it for a second, draw my lines, and see if I. Yeah, I mean, this I thought was interesting when I just looked at the chart. Looks like the S&P is in a rising wedge. Um, these are bullish, and you know, a breakout above the top of the wedge would be a very bullish move. Obviously, a breakdown would be not so bullish, but be interesting to see what happens here. All right, very quickly. I know you're getting tired of my voice. Dollar, horrible. VIX fails to get above the 200 multiple times. Notice that the VIX is in a weekly bongo green, so that predicts it goes higher from here. Bad for the market. Dollar's weak, then gold must be super strong. Not so much. One of these days it will be. Not today. Silver, equally bad, worse bad. Gold miners, which get to have the benefit of both gold and silver, not so much. And then oil pulled back on Friday as well. So I'm going to give the market mixed. I see reasons to be optimistic, but I also know what time of year it is, so I'm cautious. Let's look at my industry groups. '07, at Warehouse View. I've got 175 groups. These are the groups moving down on Friday. Oops, that's moving up. No industry group had 2-day force to the downside. That showed you how strong of a day Friday was. Now you're going to see a bunch of growth stock groups up at the top. These are the groups that are moving up on Friday. Technology, number 1, number 2, number 3, number 5, number 6, kind of number 10 and 11 and 15. All right. Healthcare, not so much here, but specialty pharmacy number 9 and biotech 14. Not really so bad, frankly, if you ask me. Healthcare looks okay too. Life insurance, I talked about that, might be strong. There's your banks and home builders and your airlines. So let's very quickly see if there's anything that looks interesting. Probably my favorite stock chart of the week will be not the first one, but will be number 3 in this group. And for all disclosure, I do own some of these stocks, and I'm not here pumping my book. Not enough people listen to this to make a difference anyway. So remember my chart. Up at the top now is the Hindis. We're going to forget about those. Weekly bond goes green, daily bond goes red. Neutral accumulation distribution. Long-term forces to the downside, short-term forces to the green side. So we're in a pullback and an uptrend. My high jump bar is dissipated, so I'm not extended. I'm not squeezing, no breakouts on Friday. I'm below the PSAR dot. No pocket pivots, no kahuna. I'm breaking above my moving average. So this is NVIDIA, lower left, upper right, sold off pretty hard. This was a big leader. Its earnings per share growth is slowing down, which would potentially bother me some. So I passed on this one. My guess is if the market's strong, this one will be strong too. AMD has got some new processors out, the Ryzen, I think they're called. It's in a nice uptrend from 7.5 to 13. It too has been in chop. I don't see a lot of reasons to jump in on this one today. Here's the one that I added to my position on Friday. This is AAOI. I like this stock for a number of reasons. Lower left, upper right. Certainly it's gotten a lot more loose here, which is bothersome. Uptrend pulls back to the 50 here, 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 and here. No, they're not perfect. Sometimes they undercut. On Friday, it broke above its PSAR dot, so there's a buy signal reversal, had a mobile breakout. It had a pocket pivot on Thursday, which could have signified something was going to happen. It had a kahuna, and its OBV is breaking above the moving average. It's also got about 12% of its float short and great earnings per share growth. If it keeps this multiple, for example, it's going to drop off 45 cents and add, if it makes its number, $2.20 among friends. A multiple of 29 times a 220 minus 45, or about $1.75 times 30, that adds 40 or 50 bucks to the stock if it makes its numbers. Now, reality is the PE is too high, it's going to come down. But is it too high with these growth rates? Clearly, it's a turnaround stock that stubbed its toes here on earnings, and now it's got massive earnings per share growth. AAOI, I own it. Broadcom, I own this one as well. I probably should have gotten shaken out, but I've got a long-term position, that with profit, so I sat in it. Good multiple growth rates, twice its multiple. Now, what I typically do when I do my analysis, and one of the things I don't love about HGSI is it only gives me 2 quarters of earnings. There's only so much you can probably put on a chart, so I'm going to put this on pause for a second. Well, best of intentions don't always work. I wanted to show you on how I use MarketSmith. They have a great forward looking of earnings per share growth, but as you can see, I'm not getting a signal there, so maybe there's something going on with MarketSmith. Broadcom retook its 50-day moving average. It's in Barron's this week as a leader in the internet going forward. As I said, I'm long it, sitting at the 50. I like this setup for a couple of reasons. I would prefer if there was a Kuna here showing some energy coming into the stock, and if the weekly bongo was green. So those are negatives. But what I like is on Friday, it's sitting right below the PSAR dot. And if I was getting on a plane on Monday, which I happen to be, and I wanted to buy this stock, to me, it's a very simple place to buy it from because I could, people have seen me do this before, but to me, it's one of the beautiful things of HGSI. I could come in here and say, all right, the PSAR dot is at 239.72. It closed at 236.54. So let's put in a buy if it goes above the PSAR dot, 239.75. And why I like that is because if it goes above that, there's going to be a bunch of people that follow Wells Wilder buy sell signal trade that might take a buy here. Okay. Where would I put my stop? I got a lot of options here. If I want to be conservative, so I'm going to put my buy stop in here. All right, I got too many things open, I have a feeling. All right, I'll fill that out later. So that's my buy stop. My sell stop, I could put it the low of this day. All right, so let me fill this out. So I put my buy stop here. Oh, I know what I'm doing. My bad. I gotta go on the line. Dummy. So here's my buy stop, right above that PSAR dot. All right. I could put my sell stop, I could put the lowest of 4 days, 1, 2, 3, 4. This, the low was 227.50. So I'll go down to 227.45, say. All right. So sell. So what I'm doing here is I'm risking about 1230, which is a little wide for some people, but it's only about 5.5%. So I could get on a plane, have my orders in. If it goes above this PSAR dot, trigger a buy, immediately put my stop in. Now, I might actually treat this one differently and say, you know, the 17, the 50, and the 8-day all came together. I'm going to put my stop right below the low of that day. And I could put a stop rather than that low. Just put the stop right underneath this bar right here. And now my stop is at 235 and a quarter. So now I'm risking about 2%. Why would I do that? Well, my hypothesis is that Broadcom is going higher. Okay. My hypothesis is that this 50-day moving average here is going to hold. If it doesn't hold, I don't want to be in the stock. All right. If I break out above my PSAR dot and it drops back below the low of this bar today, I don't want to be in the stock. So why do I need to have a 6%? I can put a risk about less than 2%, and that's a trade that if I wasn't in it, I might be taking it. And then what I would probably do is say, that's an expensive stock. Can I buy options? Options on the stock are also expensive. So that's the index. So that's semiconductors. That's a couple of interesting looking stocks. Communication equipment. Again, a lot of fallen stocks you're going to see here. Apple. We know it's in the setting of a new cycle of phones. Uptrend sideways. It's broken down below the 50. The weekly bond goes red. I see not a lot of blue, and I would probably skip it here, except I would say one thing. It's not a growth stock buy. It's not a stock that looks like it's breaking out. Okay? It's a stock that looks like it's pulled back to a new support area. And do I buy it off this support because I want to be in Apple if I don't have any Apple, and because I know it's got a new iPhone coming out? And I think the answer is a strong maybe. Um, I would rather see it move up above the 50 and buy it there because I know it's not going to go sideways for months, because sometimes that's what happens. But I think Apple looks interesting here, buying off of a new base. Juniper Networks pulled back pretty hard. Arista Networks, I'm going to put this in the same camp as Broadcom. Still out. Yeah, either they have a problem or I have to reboot, and I'm not going to do that now. Um, Beautiful uptrend, pull back to the 50. I just want to see some momentum here. I don't like the fact that this is red here. Notice how far this is away from the PSAR dot, so it's less attractive, but that goes on a watch list as well. So I'll move down the next group. This is what I do. I go from top to bottom. Semiconductors, I kept my applied materials. I had written some puts against it. I still like applied materials. Do you see a pattern here? It's pulled back hard from 48 to 44. That's almost a 10% pullback. It's sitting on the 50. It had a PSAR reversal on Friday. It had a kahuna, so there's momentum coming in. Bongo's still red. I don't like that. PE, multiples. I think applied materials looks interesting here. I will also point out that often the 50-day acts as support on the way up, and then it's resistance on the way down. One could take the bearish approach, especially on this stock here, which is sitting right below the 50, that this stock is at a perfect shorting position as well. So I've got to be careful. You ought to be careful and don't buy it until it moves above the 50. And, frankly, if I didn't have a position, and I have a position, so now I got to be careful. I'd like to see it do this and then go up and retest, but one has to be concerned that it's just going to do this. So these two are options. I'm going to watch it. I'm not jumping on it on Monday, and I'll be watching my position. Lam Research, similar pattern, not quite at the 50. So I think you're seeing a trend here, which is I'm not showing you great looking stock patterns. I'm showing you stocks that have all fallen that are moving back. Here's a leader. Well, we'll get to one in a Delta. Airlines, very strong. I showed you they all were up on Friday. Here is American Airlines breaking out to multi-year highs. Everything is green. Pocket pivots on Thursday. Not at the top of the high jump bar. Delta, new all-time highs. Nice orderly move up. Unfortunately, I took my profits at 54 because I didn't want to be a pig. Missed out on that one. I may have to go back in. Notice the number of pocket pivots coming into the stock. Notice the bongo's green here, pays a small dividend. United Continental, maybe at even better buy point. Not as much growth, that's a negative. This one's in the Dow, if I remember correctly. Pull back to the 50, kahuna pocket pivots. Global breakout from a squeeze. United Continental looks interesting. Southwest, lower left, upper right, tight. This is a beautiful stock. Earnings rates perhaps slowing down. You see a lot of negatives, but it keeps going higher. And we'll finish here on Spirit. Probably has a lot more potential than Southwest for a short-term move because it's pulled back to support here. But I think Southwest is a much better looking chart. More fun to fly on than Spirit. Infrastructure software. Microsoft, we'll take a look at a couple of these. Again, you're going to see stocks that have uptrends, pull back. Same as Applied Materials. Does it go higher here or does it fail? We need to watch. Palo Alto. This is interesting because it's failed a couple times at the 200. It broke above the 200. Might be one to watch, but I don't see a pattern here that I like buying. Semantic. Loose, uptrend, pullback to support, Kahuna, a little bit deep in the pattern for my taste. So I don't like this group. FireEye, often a subject of mergers and acquisitions, kind of sloppy looking chart. So I don't like anything there. So this is what we got. We've got stocks that have sold off because the markets have sold off. I'll show you some that are leaders. Activision. I don't know how I value something like this, except to say this has been a leader. Pull back to the 50, had a kahuna on Friday based upon my rule set. This stock is a buy here, at least from the chart pattern. Uptrend, pull back to the 50. Kahuna, I'd rather see some green up here. I don't like the earnings per share growth. Electronic Arts, not the same pattern, but had a Bible gap up, gone sideways to the 50. Everything is red. It has more earnings. And then Mobo, one that I've been in and out of, Chinese gaming stock, nice uptrend, top tier. It's now going sideways at the 50. Sometimes these stocks go sideways for a while, they heal and they take off again. I bet Momo takes off, but I don't know when. And then here's another one that I scratched my head on because what a great position on the chart. Very tight, got loose here, sitting on the 50, Kahuna, green bongo. This has been a huge leader. I don't like its earnings growth slowing down. That concerns me, but I love the pattern, so this one should be on my buy list. Banks, not the world's best pattern. These are the regional banks. Sometimes I have a hard time, I've said it before, picking which one. Remember I said sometimes they can go sideways for a long time? Remember the Russell? Well, gee whiz. Gee whiz willikers. How long have these puppies been going sideways? I don't know why the bottom line didn't draw. I know why, because I probably took it over too far. Here it is. So here you have in a box. You don't make money when it's doing this. You make money by selling premium above and below. That's Citizen Bank, Keycor, SVB. They all look the same to you. This one looks better. It broke out here. Notice the pocket pivot, the kahuna. A breakout here, mobile breakout from a squeeze. You could, if you want to be in a regional bank, just buy an ETF. And this is KRE. KRE looks like the other banks. So interesting, especially if rates go higher, but it's hard for me to pick a big winner there. Home builders, I'll pick some winners here. Home builders look great here. And again, is there going to be a panic to the front door to buy homes with rates going up? Here's what happens when you go sideways for a while. You get this prolonged squeeze and you break out and you go higher. This is D.H. Horton. Looks great. Pulte, already broken out and running. Lennar, ready to run in green. Kahuna, right below the PSAR dot. Toll Brothers. What a beautiful chart. This is probably one of the best charts that I've shown you today. From a low here of 27 up to 41, relatively tight, beautiful uptrend. So home builders right now I think have the best looking charts that I've shown you today. Specialty pharma, probably driven a lot by the first one, which got an investment by Celgene. I don't know anything about them. They're a very early stage company. They have no revenue. I never buy these companies, and I'm in healthcare. I buy companies that are closer to coming to market. Sometimes these companies get acquired. Maybe that's why they pop it. But this is a company that has a lot of work to do before it has a product come to market. Nevro, Sideways move, had a Bible gap up a couple, or not a, had a gap up a couple days ago. Arena, nice move here. It's been a nothing for a long time. Let's put a weekly on this and you'll see what I mean. I'd say it's worse than a nothing. It's been an ugly stock. They must have had a reverse split because they used to be a $3 stock back here. So they probably split 5-1 or 1-5. Does look like it's moving now. I don't know enough about this company to say. Animal company, a spinoff, I think, from Pfizer. Sideways, I know with my dog, will buy anything he needs. I'm sure we're not the only one. So, okay, not great. And then e-commerce discretionary, and here's my big boy. So I have anybody's been here knows this is my number one position. I manage this very tightly. I have, whenever I'm concerned about the market, I'll buy puts, which are expensive, and I'll mitigate that by selling calls that are a little bit out of the money and selling puts that are way out of the money. And so I pay for my insurance by selling other things, and then I play with them. So, for example, last week I had a put spread on, and when the market turned up, I just bought back the FAR put and turned it into a credit put spread and sold a put at the money and made, and salvaged the put that I had sold, that I bought, which went down in value, by buying something that went down in value, or by selling something that went down in value even more. So I protect my account balance on Amazon, but it's one that you got to look at it here and say, wow, it's time to buy it again. I hesitant to say that because it's an expensive stock. It's had a big run. You almost got to play this with options because unless you got millions of dollars to go spend because it's $1,000 or so a share. It's got earnings per share growth. It's an expensive stock. It's a lower left, upper right. It's sitting on the 50-day moving average with two kahunas last week. I'd rather it's in a squeeze. I'd like to see this bongo go green, but I think Amazon, if I had to be a buyer or a seller sitting on the 50-day moving average, I'm a buyer, which means I get rid of some of my protection. Netflix kind of reminds me a lot of Apple in that it's pretty deep in the pattern and doesn't look like something I want to jump on. However, then I look at it's got good earnings per share growth. It looks to me like it might have found support here. It had a high closed doji and took out its 8-day exponential. I at least want to watch it. I'm not sure I want to go jump on it yet. Mercado Libre looks the same. And then PetMed, this is another one of we do anything for our pets, online pet drugs and supplies. Big move up, pull back into the 17. Looks to me like one of those buys. Had a pocket pivot on Friday where I put my buy above the PSAR, my stop below the low of the day if I wanted to play Pets Med Express. Every day when I do my market analysis, I do what I just showed you. I get a sense of what the market's doing, who are the leading groups, and what are the best stocks in the leading groups. During the weekend, I supplement that by looking at the leading 600 or 700 charts. When I did that this week, these are some of the charts that I came up with that looked interesting, or at least my buy watch list for this week. We looked at Amazon. Priceline had a great move as well. Just go through these very quickly and I'll comment upon why I like them. Now, keep in mind that certain stocks that I own already may not have made this watch list because I'm not interested in buying more. Priceline in a sideways move, but it looks like an ascending triangle to me, kind of like the S&P. Kahuna, pocket pivot, bubble breakout from a squeeze, went green on the bongos, had a big move off the 50 on Friday. Looks like it wants to go higher. AOI we looked at. The first one in the list, I'm sorry, was price. Okay, good. Applied Materials, we looked at. My concern, I drew out what the likelihood scenarios are. Broadcom, we looked at. D.H. Horton, we looked at. American Airlines, we looked at. I'm pointing out something here, very important. I'm going from the top. These are ranked by momentum. And what are we finding? The same stocks that I found in the top 10 industry groups. That's why I spend my time on the top 10. Delta, we looked at. A couple of refiners looked interesting the last couple of weeks. They're clearly in an uptrend, but in a loose uptrend. Their bongos are green. I had a pocket pivot in Kahuna here on Valero with a 4% dividend. It's got some growth. Light Lumentum is another company like AAOI, doesn't have the same earnings per share growth. Short natural gas futures 3 times. It looks like it's at a good buy point if I want to buy it. Notice the weekly bond goes green. Um, Probably shouldn't be there. Here's another refiner moving in off of a confluence of moving averages with a Kahuna. This is Marathon. We looked at Pulte already. Coherent is another laser stock, semiconductor laser stock. And this is an expensive stock. I own some of it. It's had a pretty significant pullback. You may ask, well, why would I still own it if it's pulled back? Because I own it from way far to the left, and I'm a firm believer that within reason, in a bull market, I let my winners run, and we're still in a bull market. I let this pull back probably more than I should have, but so far it looks okay. Doesn't mean I didn't sell some calls against it to mitigate some of that. Look at the earnings per share growth on this stock. Look at the PE, lower left, upper right, getting to close to, if not at a good buy point. We looked at Southwest already. We looked at Lennar already. We looked at Momo already. Nevro, I was on the list. I just said it's too loose. It is too loose. The reason why it's sitting here, I don't remember. I don't like it very much. I bet there's a high close doji on the weekly. It's sitting here because of the weekly chart, and this is a high close doji occurring after 2 dojis in a row. I thought this was a pretty good reversal opportunity. I don't like the chart otherwise. Take Two Interactive, we looked at that. We looked at Electronic Arts and we looked at Activision. Here's another one, run up sideways into the 50, mobile breakout squeeze Kahuna, one of my favorite buy points. Love the buy point there. Viva, we looked at. Here's a retailer, online retailer, I think, or technology play. I can't remember what they're, maybe gaming. I sold it last week. It shows how stupid I am. In the crap that was going on Wednesday and Thursday, I basically said I'm at an all-time high on this. I'm taking my profits. Looks like Friday was potentially could be a reversal day. Spinning top, almost a shooting star-like appearance. Wynn Resorts, pull back to the 50. Good buy point. Evolent Health don't like the fundamentals from an earnings perspective, but they're in population health, looking at the changes in healthcare delivery called MACRA, which is a business that I am in as well. I think that it's in the right industry group. It's a pretty nice looking pattern, pull back to the 50 in an uptrend with a Kahuna and a Bongo. Allison Transmission, auto parts stocks were weak, and then on Friday they got strong. They make transmissions and other things for new cars, sitting on the 50. Pocket pivot Kahuna. I don't like the Bongo. The risk here is it goes sideways. I don't see this falling hard. I love the earnings per share growth. It's a turnaround play. Insurance stocks look strong. This is a tight lower left, upper right. It's not cheap. It does have great earnings per share growth. It had a Kahuna on Friday and a mobile breakout from a squeeze. Here's a retailer pull back to support at the 50 with a pocket pivot and a Kahuna and a mobile breakout from a squeeze. Here's another refiner. Here's a specialty chemical stock. Nice pullback here. Nice tight chart. Good earnings per share growth. Small dividend. Payment processor. This one I think also looked good on the weekly chart. Let's see. Uptrend, pullback, broke above the 17. Kahuna on the weekly chart. I'm trying to remember why I like this besides its earnings per share growth. Cement maker, nice uptrend. If construction is positive, they got to get cement. FMC, Bible gap up and then a sideways move on the 50. I don't buy this here. I look for momentum and then I get interested. Specialty chemicals. Here's another insurance play. You can see how strong these are, lower left, upper right. Here's a specialty pharma. Again, I can't remember exactly what I liked about this stock. It had a high close doji and took out the PSAR dot. Look at the group strength on the weekly. They've got a new drug approval that's circling, I think, in pain. I wouldn't be buying it here. It's on a watch list, and I think we're almost getting done. Exalta Coating, sideways move, sitting on the 50. Needs some momentum, but I'm watching it. Acagen, ditto, sideways move, pocket pivot, Kahuna. I'm looking for the stock to break out. Here's a technology play, pull back to the 50 with a Kahuna. Probably figure out what I like. Colony North Star, this is the sole REIT. I think that made my buy list, pays a 7.5% dividend. Don't like it that much, but like the dividend. Here's another semiconductor, the same pattern, but beautiful uptrend. Pull back to the 50, PSAI reversal, pocket pivot, and Kahuna coming out of a squeeze. Great earnings per share growth. Kemet looks viable right here, KEM. Millicron Holdings, sideways consolidation, a couple of pocket pivots. There must be a weekly signal here. It was a high close doji. Again, sometimes I don't remember why I like these stocks because I looked at them a couple days ago. I put this in the lower of my interest. Hudson Technology, a breaking out technology play. Earnings per share are picking up. It's a turnaround. And then Builders First Source with Home Depot, Lowe's, and HDS getting hurt. This one's in the same category. I like the earnings per share growth that are coming into the stock. You don't see it here. And sometimes that's where I get something out of MarketSmith, but I'm not getting anything from MarketSmith except they can't find me. Sideways, Kahuna here. Bongos are green. Here's a defense play. The problem with defense plays, you look at Northrop Grumman, you look at Lockheed, United Technologies, they are so expensive. Here's a sideways play. I'd be looking for this to break out of its box. Spirit Aerosystems. Skip that one. Here's another specialty chemical slot. Lower left, upper right, relatively tight. And then here's probably the best performing of the specialty pharma stocks of the year. I've been in and out of this. I should have just forgotten about it. Lower left, upper right. This is Supernus Pharmaceuticals. MCOR is another building stock. And again, it showed there's some other signals from my other programs. I'm going to skip it. And those were the ones that I liked. And on that note, I just want to show you two things and then say goodbye. If you have the program and you go into Designer and you go up to the top and you look for where it says Smart Groups, you open it up, you'll see my name. You come here, 3 times volume. I like to look at stocks that had a lot of volume come in. I like to look at stocks that pull back to the 50 and break out. There's my Allison, my Amazon, my Applied Materials. So all I really had to do today would have been go into this list here. And the next chart's kind of funny. Amazon, this is all the securities of my index sitting on the 50 with a Kahuna. That's kind of interesting. Here's Applied Materials, United Continental, Spirit, Japanese. Here's one of those defense plays. You see it's perfect buy point. It's a $200 stock though. So I use this pullback to the 50 with a Kahuna to find potential buys. And this is my other favorite place to go looking at. And we talked about Broadcom. This is looking for stocks that are squeezing, meaning they're basing most likely, and the price is sitting right below. These are lines that I made that have no meaning. sitting right below PSAR dot. So on that note, I'm going to say goodbye. Thank you so much for joining me. Trade safe. Um, it's time for caution. And as it says right here,